Don't worry, in this video, I'm going to clear up all those confusing financial definitions when it comes to income. This video is going to be all about the income-based financial terms. And I'm going to give a couple examples to help illustrate. So the first one's going to be income. Income itself. What is income? Income is the amount of money you have coming in. Baby money. So all the money you have from, say, your job or your side hustle or whatever you have, that's all considered income. Gross income. Gross income is the amount of money you have coming in before anything gets taken out of it, before any taxes, any deductions, none of that. So gross income, an example of that would be if you have a job and you make $50,000 a year, your gross income is $50,000. This doesn't count for taxes or anything. It's just the raw amount of money you make. Net income. Net income is the amount of money you earn after taxes. That money is your net income. Take home pay. This is the money you actually get, the money that goes into your bank account. Take home pay is the money you earn, say from your job, after they take out money for taxes, after your 401 contributions, and after any other deductions you may have. What gets deposited in your bank account is your actual take home pay. Side income. Side income is any money you make other than your main job. So your main job where you work, whatever that company is, your 9 to 5, that is your main income. Anything you make on the side or outside of that is your side income. So if you're doing some handyman work or you take a one-off job or do some Uber driving, that's all side income. Income streams. Income streams are just that. They're different streams of income that are hopefully being deposited directly into your bank account. This is money that comes to you. So your main job is one stream of income. Your YouTube channel is another stream of income. The side hustles you have, whether you're Uber driving or whatever your gig economy, that's a stream of income. If you have rental property, that is a stream of income. So different ways you have money coming in are the different streams of income. Biweekly. Some employers pay every 2 weeks or every other week. So every 2 weeks you're getting paid from your company. That's all biweekly is. Some companies actually pay every week. Some pay once a month, but biweekly is every other week. Overtime. Okay, overtime refers to any work that you do outside of your regular hours. So if you have a 9 to 5 job and you're working 5 days a week at 8 hours a day, but one day you work an extra 2 hours, that's 2 hours of overtime. That's 2 hours that are outside your regular scheduled time. That's all overtime is. Overtime is generally paid at a higher rate, but depending on where you are, that rate can vary. Commissions are just another way to get paid. Generally for a task or a job, commissions be paid like a realtor. A realtor is a good example of somebody who gets paid in commissions. Whether they help with the transaction, whether they do, when they help you with their transaction, whether buying or selling or however they're helping you, they get paid when the deal happens. If the deal doesn't happen, they don't get paid. So they want to make sure the deal happens. Car salesmen get paid a commission. Sometimes it's in addition to your regular work, depending on the type of job you have. Anyways, commission is just another way to get paid. Hourly. Hourly refers to your regular 9 to 5 job. So this would be an employment position. If you're paid based on the hours that you work, that is hourly pay. So if you go work as a barista at a coffee shop, then they agree to pay you, say, $15 an hour. You make $15 an hourly. That's an hourly rate, hourly pay. Salary. Salary is another way to get paid. Unlike hourly, where you're paid so many dollars per hour, salary, you're paid for say a week or a month. It's an agreed upon amount of money that you are paid for working at that company. Sometimes you have to work more hours, but sometimes you get to work less hours. But you don't have to punch a clock. So that's salary. Okay, contract pay. Contract pay is another way to get paid, generally by task. So, like if you're a tradesman, electrician, plumber, construction worker, or whatever, could be anything, you get hired to do a job, then you get paid based on that task. That is contract pay. Another example of contract pay would be is if you were a consultant or giving some advice, maybe a life coach or whatever. You're giving your advice based on your knowledge and experience to somebody else for pay. That would be a contract pay. That's just a couple examples. There's many examples of contract. Okay, bonus pay. An example of bonus pay would be like a Christmas bonus, or your employer saying, hey, you did a really good job with this, here's some extra money. That would be bonus pay. Not super common, but does happen. Tips. Tips are another form of income where usually servers, bartenders, and various people get tips. They're the positions that are pretty known for tips. And if you provide good service to somebody, your customers not only pay the bill, but leave a little extra as a tip. So if your bill is $20, but they leave $25, you get a $5 tip. $20 goes to the restaurant or company for the work that was done or whatever was provided. And the extra $5 is your customer saying, you did a good job. You get a little extra. Passive income, one of my favorites. I love passive income. Passive income is money that you don't have to work for or no longer have to work for. An example would be is if you had a rental property. If you had a rental property and you had tenants there, they would be paying you rent. After the expenses, the money that's left over is your passive income. Another example would be with royalties. Royalties are like if you were to write a song, make a movie, maybe you're an actor in a movie, or a YouTuber. You made a YouTube video. You do the work once, but you keep getting paid on it as long as that video, song, or movie gets played. You get a little bit of it. That's a royalty. Those are examples of passive income. Earned income. Earned income is money you had to do something for. You had to provide work, labor, or service for. Your job is a good example of earned income. Freelance. If you're a tradesman, you go do some work on a house. That's an example of earned income. Earned income really has to do with a tax status. It's taxed at a higher rate than unearned income, but that's another video we'll get into at some point. Unearned income, kind of cool, a lot like passive income. You don't have to do anything for it. So this would be things like your dividends, your interest, and so on, royalties. It really, again, like earned income, is more a tax status. So it's taxed at a different rate than earned income. But again, for another video. Taxable income is the money you earn that is subject to taxes. Meaning your government or local agency, they can take some of that money. They always got their hand out. I think they had the better end of this deal. They didn't even earn it. Okay, anyways. Adjustable gross income, or AGI. This is a tax thing. So when you go see your tax man, you give him all the incomes you have. He's going to go, okay, you made this much money. And then he's going to take deductions or withdrawals or things that you can write off to reduce that amount of money you owe taxes on. So if he takes you from $100,000 down to 50, then your taxable income is now $50,000, not the 100. They do this with all kinds of write-offs and deductions and different government incentives. Withholding refers to the amount of money in your paycheck that is held back to pay for things like your taxes. It's withheld from you. It's not really a bad thing. It's just withholding. Okay, deductions. Deductions are, again, referring to your paycheck, is the amount of money that is deducted from your pay to pay for things like your health insurance, those different benefits that you signed up for or have to pay, Social Security, if you have a 401 or retirement account, those are deductions from your paycheck. Direct deposit. Direct deposit, again, referring to your paycheck, refers to you don't have to get a check. Your payroll company is actually going to deposit the money in your bank account. That way you don't have to deal with it. Cool thing about that, you generally get paid a little sooner. Yeah. The last one I have for you is windfalls. Windfall is generally money you didn't expect. So a tax return that was bigger than normal. Yeah. An inheritance, bunch of money coming. Yeah. Or maybe you won a lottery ticket or a raffle or a gift or something. It's basically money you got that you didn't expect. That's all the windfall is. Well, I hope you enjoyed this. Thank you so much. Since this is video 1 of my brand new channel, I'm assuming the only people watching this are people I know, friends, family. But hey, maybe I don't know you and you're somebody that stumbled across. What I'm asking for is some critique. I want you to critique this video, me, how I came across, because I want to improve this. I want to provide a greater value. So your input is appreciated. Until next time, thanks.